Alrighty, traders. Alrighty. Welcome to another live stream with Johnny Howe, me. Alrighty, traders. Let's get straight into it. Alrighty. Welcome to another. Let me get. I want to do I'm going to be doing another live stream with you today, guys. So, I hope you guys are doing well and you guys have been focusing on the markets and been watching what's been going on right now in the markets, and so on and so forth, right? So one thing I want to share with you today, guys, is I want to share with you about the selling in silver and gold and also the GDX and GDXJ. For the last my live stream that I did yesterday with you guys, I talked about how the silver and gold in the silver and gold market right now has had a lower low. So therefore we could create some sort of lower high. If you guys are with me yesterday or saw yesterday's live stream, you'll be able to see that that's what I said. The market is always giving us some sort of warning, right? So, welcome guys to today's live stream. This is just another edition of to help you understand what's going on in the markets right now and help you understand what's really going on right now when it comes to the markets, okay? Because at the end of the day, it's so important that you read and you listen to what the market is telling you. You don't try and fight it. The market is always trying to give us some clues. The market's always giving us clues on what's happening, what's coming next, or and what could be happening. And what we're seeing right now in the markets is exactly what I said yesterday is a high probability of happening. And yesterday's live stream, I talked about how that we created a new lower low and we're likely to create, and this has a very high probability chance of creating a lower high. In fact, I said yesterday in yesterday's session that the silver market, especially the silver market, ran up and hit resistance. And I said, this has a very good chance of creating a down bar or creating a lower high through here. And that's exactly what we got through there. So guys, it is just, the market is always giving us some clue. And it really is, if we just remove all the clutter and all the crap and everything like that through there, the market is always giving us, all right? The market is always giving us warnings or some clues to what's going on right now. And that's why it's so important that when you are trading the markets and when you are watching the markets, that you listen to the markets. And remember, the most highest probability trades are when there's someone clearly in control. I'm not talking about the bars. I'm talking about literally the highs and lows. So anyway, guys, welcome to today's session. Give me a hey and in the chat box and let me know where you're logging in from. And we are going to get straight into these markets. So again, guys, the market is always giving us some sort of warning, and I hope you can see that from today. So before I do, guys, let me now get straight into today, and I'll get straight into the disclaimer. Guys, do not place a trade based on what you'll see in the session today, because trading is risky and it can cause substantial financial loss. There is so many areas you need to know to become a good trader, right? There's the foundations, there's the chart reading, there's the trading systems, and also the mindset. So there's a lot of areas that you need to know to become a really good trader. And if you need help with those areas, then make sure you head on down to the mastertraderlab.com, where I'm going to give you access, free access, a free trial access to the Grab the Markets by the Balls trading course. It gives you access to 2 amazing trading systems as well in that. Then you're going to get access to the foundations, the chart reading mastery courses, the mindset, breakthrough courses, all that sort of stuff to help you start and get ahead in the markets. Again, it's a free trial. If you're not happy, let me know and you'll never be billed. If you are happy, then you can stay a member to the Master Trader Lab. So mastertraderlab.com, go on there, grab your free trial and test it all out and start learning everything. Foundations, chart reading, trading systems, mindset, and a whole down home country goodness. Alrighty. How about that for a plug? Oh, I love what I do, guys. I love what I do. Alrighty, guys. So let's actually continue now into today's session. So let's have a quick roundup, quick recap of what's happening in the markets today. Okay, so we're going to look at my 4 screens here, and actually, is there 4? Maybe there's 8 times 2. So what do we have here? Okay, so the first thing, let's actually focus on these two. We'll focus on these 2 charts through here, right? So we focus on the S&P 500. Didn't really do much today, and the Dow Jones, same thing as well too, right? So the Dow Jones is doing the same sort of thing as well too. But remember that look where the Dow Jones is compared to what? Compared to the spit it out, John. Compared to the S&P 500. But now remember, guys, the S&P 500 and the Dow Jones generally go in sync with each other, right? They generally go in sync with each other. Now let me explain what I mean here, okay? Let me do this here. I'm going to take where's my Snagit tool? Come on, Snagit. Come on down if the Snagit is right. Print screen. Why aren't you? I want to Snagit. Where's my good old Snagit? There we go. All right, cool. Now, I'm going to just take a little Snagit tool here. Give me a yes in the chat box if you love Snagit as much as I do. So I'm going to draw this into you here, guys. I'm having a good old time right now. I love trading, guys. I love trading. So let's actually I'm going to take a Snagit tool of just the Dow Jones and the S&P 500. Okay, so I'm going to do this here, and what I'm going to do is I've lined up them so you can see what I'm seeing here right now. Okay, and don't worry if you guys have come here for the silver and gold. I'll get to that in just a minute. Don't get your knickers in a bunch. Pick them out. So this is the reason why I say that the Dow Jones and S&P are 90% of the time go in sync. When they decouple, this is a sign that something is not quite right under the surface, right? So look at this here. Market runs up, right? Market says a down bar. Market goes from here. Market runs up. You know what? Let's do this here. Bam, right? So market runs up, and then we go sideways for a while. Look at this here. That's the Dow Jones. The S&P market runs up, goes sideways for a while. Then we go for a run, and then we have a dip. And then we go for a run, and then we have a dip. And then we go for a run. We have a high, bit of a double top action. We run up, bit of a double top action, and we go drop down. And then the S&P drops down as well too. So you can see, right? You can see how that the Dow Jones S&P pretty much go hand in hand. But look what's happening now. The Dow Jones is basically hitting the high again. Sorry, S&P's doing that, but the Dow Jones is doing what? Look at this here. Ooh, it's weaker than the S&P 500. What does that mean? That means 80% of the time, actually, no, I'd probably say 90% of the time. 90% of the time, that means that there's something not right underneath the surface, and we're likely to start seeing some selling soon. Majority of the time, that's what it means. There has been one time when I saw this and I had that assumption, but it didn't happen. And the S&P dragged the Dow up with it. So that's a possibility as well too. But most of the time, if the Dow is here and we start to get a down bar, and especially if we get a down bar breaking below this previous low, then that means the S&P is going to come down a lot quicker, and the S&P is going to catch up to the Dow Jones, so they can be hand in hand again. So they can be hand in hand, sink and sink, so they can come back and be together, be a partner again. They've been separated for a while. Let's actually get them back together. So that's basically what, as you can see with the S&P 500 and the Dow, right? So that's really, really, really awesome thing that I learned. I started learning this, guys, when I was trading I was heavily trading even the S&P 500. And actually that was pretty much my baby in a sense, back in 2008. And I was doing anything from a short-term trade, meaning getting in a 1 minute chart and holding for a few minutes and getting out. Or I do like a daily 60-minute analysis and try to find some areas where I could do like a daily swing trade type thing where I get in and I'd have like a 10-point stop and a 10-point profit target. And I always knew, right? The most highest probability trades were this here, right? So this, yeah, you want to be green on me? Don't be green on me. I got to fight with the Snagit tool. So if this was the ES up here, right, which is the even the S&P 500, call this here, right? And I saw this happening on the hourly chart and ran back up, and the market was running back up through here, and I was looking to short it through here as well, right? I was looking to short it through here on the ES chart. Well, on the Dow, I may have had something like this here, and then if the Dow also ran up into this resistance level as well too, at the exact same time, I'd look to short it here, short it there, and have a 10-point stop and generally a 10-point profit target, and away we go. And that's when I started really learning so much by doing that style of trading. That, hang on a minute, and I started dissecting the most. I said, okay, this trade here was a really successful trade. What was the? And then I started looking. Okay, this trade here didn't do really well. Or I may have got into the S&P 500, but then it kept running up for maybe another 3 or 4 points, but then before it started to turn over. And I'm like, and then I started to break it down, and I started noticing the Dow and the S&P that the really successful trades is when the Dow and the the Dow and even the S&P 500 were going hand in hand, sync to each other, and that's when the power came involved. So that's when I really started to learn that. And then I started watching it time and time again. I'm like, hang on a minute. And then the daily charts and so on and so forth. So that's what I'm seeing through there, guys. So if we start to get a rollover, which the Dow's struggling right now. So if we start to get a bit of a rollover from here and we start to break this previous low, then we could start to head down. Same with the Russell, right? The Russell's doing the same thing as well too. NASDAQ and the S&P are holding strong. But NASDAQ and S&P are holding strong. But that's basically what's going on through there. So I always say the Dow is the leader. Some people say the transportation average is the leader, or all that sort of stuff. To me, it just makes sense that if the top 30 stocks in America, the biggest top 30 stocks in America, are doing something, generally that's a good sync of what's really going on. Make sense? So guys, give me 30 seconds. I've got to pee. Alrighty, I'm back, guys. I'm back. Man, I drink so much liquid. I gotta pee all the time. So that's basically what's happened there on the stock market there. Okay, guys. Now let's go have a look. Let's have a good old Po Beak who lost a sheep and couldn't find them. Let's go to here. And let's go to here. And let me share with you okay, so let's start with gold here, okay? Gold. Now, gold, as I said before, the problem with gold is, firstly, I talked about how if we break it back above this trend line through here, that's probably what's likely to happen. But also, I was saying that the daily charts, or basically what's happening on the daily charts, is, remember, we created this low, and then this lower low through here, right? Low and lower low through here. So that lower low through there is not buyers in control. The buyers are not continuing to raise their prices. So remember, we could start to get some sort of lower high through here. And if we start to break this previous low through here, it means we've got a lower low, a lower high, breaking past previous lows, which is the 2,800 level. If we get that, sellers are now in control, and we're likely to start seeing probably another sharp drop down possibly even down towards the lows here. So that's actually really interesting to see what's going on right there with the gold market. So that's what I'm saying there right now. And same with silver, right? Silver, once again, we had a low, a high low, a high low, a double top, ran down, created a lower low. And yesterday I was saying that we could also, okay, we could also be rejecting off this resistance level here and getting ready for a lower high. We've created some sort of a down bar through there. What was the volume? The volume was actually pretty strong there. Okay, so now we have a high probability of this actually coming down now to at least this support line through here. And if it breaks that level of support, then we're gonna be testing new lows again in the silver market. So that's what I'm seeing through there. If I go have a look at the SIL, same sort of thing, right? Look at this here. We have a higher low, a higher low. We had a lower low, and now we're starting to fail through here. It's start to create some sort of lower high. If we break this previous low, then sellers are in control. Now, lower low, lower high, sellers in control, and also the weekly chart is still creating these lower highs. So that's just this is now going to be a continuation of the bigger trend. And same with the GDX as well too. GDX here. GDX is a bit different, meaning because it's actually looking a lot stronger. So it's actually a much more harder one. But again, we had a low, a higher low. We created this lower low, which is not sellers in control. And now we ran up, and now we're having a bit of a drop down through here. So there's a lot more bullishness in the gold stocks as well too, guys. That's more because of this weekly chart. That's why what's making me say that. Meaning we've actually ran up and created an equal high compared to the previous highs through here. But if I go to say the SIL, the silver stocks, you can see how that we're still making clear lower highs, lower highs, lower highs. And this still could be some sort of lower high through here on this chart through here. So once again, the gold stocks, let's have a look at the GDX as well too. GDX, as you can see, same thing, same sort of thing, right? We ran up, made an equal high. So we're starting to get a lot more we're still got the overall, there's an overall bullish sentiment in the GDX and GDXJ. But on the shorter term, we're getting this period through here where the market is just the market is getting a bit of a sell-off. But I don't expect too much. Who knows what's going to happen? But I don't expect to see too much selling happening in the GDX and GDXJ, only because where we are right now. We're probably going to go sideways for a while until it decides what it wants to do. But with that being said, guys, we could be getting ready for another leg down. Yeah. So that's what I wanted to share with you today, guys. Let me go through the chat box and let me answer some questions for you. So if you have any questions, put them in the chat box. The VIX is way too low for there being a trade deal postponed again. High probability chance that the VIX spikes. Gold made a lower high, but I think it's consolidating. Firstly, the VIX. Remember, Jesse B, the VIX, don't play the VIX, right? Don't touch the VIX. Do not be playing the VIX. I'm going to say that again. Don't be playing the VIX. I played the VIX for quite some time, and who knows if we just go sideways for a while, then the VIX is just going to go lower and lower and lower, right? Because the VIX is basically volatility index there. So don't play the VIX for a blast off past 1350. So yeah, so you don't want to be doing that. Hi, John. I need to ask you how to be more patient in options trading. Well, Jack, that's actually, it's a good question you asked that. It all comes down to a few things that come straight to my mind. Firstly, it's not options trading that you need to be patient with. It's firstly, do you know exactly what you're looking for in the market? Because you may be getting into trades and trading options and being patient, but there's no real system of getting you into trades that you should be patient with. So now being patient and waiting for trades that meet your plan, it's just a matter of just saying, I know if I take shit trades, I know if I'm like Jesse B, I'm going to keep going backwards. Who just tries to pick tops and bottoms of the markets, and just is all over the place. So no wonder he keeps losing money. the thing is that Jack, that's your first thing there, right? So the first thing is like, do you actually even have a trading setup, right? A trading setup that you're looking for, because remember, it's not the options that make you money; it's the stock that it's the stocks that you pick, right? Because if you cannot pick a stock that has a high probability of moving that direction, it doesn't matter what option you buy, it's not going to do well. It's not the option; it's your ability to be able to have a good picking of the stock there. Excuse me. So I hope that makes sense. Most people say, "Oh, well, trading stocks didn't work for me. Let me try options, or let me trade futures, or let me try forex." It's not the market that gets you. It's all of the. You've got to have a really good high quality setup first on the chart, and then use the option to do that. That's the first thing you must ask yourself. If you don't have that, then what are you being patient for? And the reason why I say that is because if you are being patient, right? If you are being patient in the markets, then there's two types of patience, right? There is patience waiting for the trade, waiting for the setup, and then also when you're in the trade, being patient, but you need to have certain rules to say, okay, this is when I need to be out, or this is when I need to stay in. So that's basically what I say there. So let me continue on now. Let me do this over here. So I hope that makes sense there. At the end of the day, remember, it's not the options that make you money. It's the stock. It's you be able to have a really good trading strategy that's going to make you money there. But isn't Boeing? I wouldn't say no. I wouldn't say one stock is going to weigh heavily on the market. No, not really, because you got all these other big stocks in there as well too. So one stock is not going to weigh heavily on the index there. Look at Lockheed Martin and on the drops. That is a massive bear market, and these stocks will be a huge drag on the markets. Maybe in Dow versus the S&P. Yeah, H1398. No, I don't think so. No, I don't think so because there's so many there's obviously 30 stocks in the Dow 30. So I don't think that's going to have a big movement, a big effect on that there. So yeah, so that's basically it's but I've noticed overall when that sort of thing happened, when you decouple that there. So yeah, I hope that makes sense. Ooh, we don't know what trading options is. Options is a derivative, Jesse B. Options is a derivative from the actual stocks itself. So instead of just buying stocks and buying things, you can go buy an option over that particular index or the ETF or the stock, which gives you a lot more leverage, but also gives you it's a double-edged sword. It can give you a lot more leverage, but also can give you that generally for every 1% the stock moves, you can make a 10% return on the option. Now, vice versa, for every 1% the stock goes against you, you can also lose 10% roughly. So I hope that makes sense there. When our bread and butter stocks aren't doing well, that's bad news. Military stocks. I wouldn't say they're the bread and butter stocks there, Jesse. Who said they're the bread and butter stocks? Big stocks that have been moving these markets for the last couple of years, the bread and butter stocks have been tech stocks. They're the ones that have been, the big ones, right? So, yeah. Hey, John, it good to short BA and Tesla? If your plan says so. Tesla. Yeah, I wouldn't touch Tesla. But again, it all comes back down to whatever your trading setup you trade with. Remember, because it's all about having a trading setup that having trading setup that you trade every time, you be consistent at doing that, you're going to be consistent at making money. But if you just think it's a good time to start shorting now, no, never a good idea. Alrighty, so POLZ, you have to know by now. John won't tell you what to do. Ha ha ha. It's your own choice. No, Jesse, it's not because the thing is, Jesse, is I can't tell you what to do, because the thing is that it's not about making money. Trading long-term successfully is never about making money on just one trade, or picking a top or picking a bottom, or getting in because you think it's a good idea. That's never about that. Trading long-term successfully is never about making money on 1 or 2 or 3 trades because you got it right. Trading successfully is only trading a setup that is proven to you, wrapped around with the trading rules, and you only stick to those trading rules. That's how you be long-term successful. So when I can't tell people to enter a particular stock, because that's not way trading is. I can give you some market updates and so on and so forth, but give me the quick tip is never going to work like that. What you need to do, and what you got to understand to do, is to develop a plan instead of running around with your head cut off like a headless chook. You need to spend your time developing that plan, or investing in someone who's going to give you that plan, and then working that plan. That's what long-term successful. Because even if I did say it's a good time to go short Tesla right now and it went down and you made money, what good is that for the rest of your life? If you want to be a really successful trader, you must be a self-reliant trader, where you look at a stock and you're like, I know this is a good setup because it meets my plan. I've seen it many times, and so on and so forth. And that is a big problem with this industry, with you guys, is that this is all that, because it's so easy to access, right? It's so easy to open up a trading account and start to trade these markets. And that's what you want to be doing there. So, yeah. Jesse B, my man, you really need to spend your time educating yourself in these markets, my friend. You really do. Bruce, how you doing, champ? Hope you're doing well, my man. So guys, one thing I want to really touch on in today's session, a lot of people are looking for that quick tip. I've had, this year has been my most successful trading career, my most successful trading year ever, or the start of this year ever. I've had a few break evens. I haven't had any losses, and all the trades I've taken have been small profits and also nice big profits. But that has come down to my ability to only be trading the most highest quality trades out there, and being consistent, disciplined, and patient. So I hope you can understand, guys, that if you want to be long-term successful, it all comes down to how disciplined are you to stick to one setup. That's it. The reason why I've had such a successful year so far, and I'm going to have probably the most successful trading year this year, is because I've really knuckled down on my patience and not just forcing things or trading things. If there's not a trade for a whole week, or if there's not a trade for 2 weeks, then I don't trade anything. Even if I have to sit in front of the screen for 5 or 6 hours, trading the futures market, looking at all markets. Like I'm telling you right now, guys, this entire week I've taken 0 futures trades and Forex trades. 0. But I've been watching them for 5, 6 hours at a night time. So that's basically what trading really is all about, guys. It's not about you ever making money on one trade, but it's all about you. It's all about you having that confidence, right? Because how can you really have the confidence if you want to be a really long-term successful trader, right? You've got to start to have the confidence to start to put a bit more money on trade. And I hope you can understand that. right, guys? And that's what I'm all here. I'm here to really help you with the foundations to that, which is understanding how to read the markets properly, and all that sort of stuff as well too. You need to understand those things. That's why in the Master Trader Lab that I talk about the framework, right? The foundations, the chart reading stuff, the mindset stuff, all this other stuff matters. But unfortunately, the reason why 90% of people in the markets just don't do well is because they don't focus on that sort of stuff. Now, what is the mindset of a successful trader? The mindset is simply put, they don't do anything. They never trade out of boredom. They don't place a trade because they think it's a good idea. They don't place a trade because they hope or it looks like it's a good idea. They only trade when a proven pattern on the chart, and that's really what it is. It's a pattern. Call it anything, right? But it's a certain pattern that they believe in. They know exactly what the pattern looks like. They know exactly what the entry bar looks like off that pattern, and they only trade that. Once you can do that, then over the 12 months, you'll be successful by doing that. But the problem with most traders is that they're very bored. They haven't had a trade like me. I haven't had any trades in the Forex and futures market this week. And I've spent probably close to 25, 30 hours now watching the markets unfold in the afternoon like I do. Because I trade those markets every day. But I'm not going to trade a trade out of boredom because I know I'm only going to go backwards. And so what most traders do is they try to pick tops, they try to pick bottoms, they try to fight the market, they're trying to do all this sort of stuff. And then by the end of the year, they're getting their heads handed to them, saying, man, that was a shit year. That was a shit year. And the reason why is because it's the opposite in the markets. Because I'm telling you right now, guys, it's not the amount of trades that you take. It's not like, well, if I take only 12 trades this year in total and you take 60 trades this year, it doesn't mean you're going to make more money. In fact, I guarantee it's going to be the complete opposite. Your account's going to be down 50% and my account's going to be up 300%. Because it's the quality of trades that you take. The quality of trades that you take matters. And if you can only trade, like I'm telling you right now, guys, if you trade the stock market every day, and like I do with my private clients, I give them scanning codes. We use TC2000. And then what I do is then I do that, right? And then what I do is I run my scans every day. And just say throughout the entire year, you did that. You only traded 1 hour per day. You ran your scans, look for really, really good setups on the daily chart. And let's just say, most of those trades worked out. Call it a 90% success rate. Every now and then you're going to have a trade that goes against you. You have a losing trade. Okay, get out of that and be done with it. But I guarantee you, if you just did that and you had you didn't trade a lot, but you had a very high win-loss ratio, by 6 months into it, you'll be now confident to increase your position sizes, to do whatever you can to get more money into the trading account because you know this works now, and it grows and grows and grows and grows from there. And before you know it, by the end of the year, you're kicking ass because you've only taken 12 trades. I'm using that as an example. Like, I don't take 12 trades throughout the year. Now, with the actual trading the daily stocks, there's not a lot of trades throughout the year. There might be only a couple of dozen really good trades throughout the 12 months on the daily charts. Now, when I'm trading the futures market, I'm talking about the 1 minute chart, 2 minute charts. I can have a couple of weeks where there's no trades at all. And then the next week, there's 4 really good trades that week. Or I might have a whole month of no trading at all, and then the next month there's 5 good trades. You see what I'm saying there, guys? So that's part of the mindset of a successful trader. It's that there, and the foundations, or what I call the framework, which you learn in the Master Trader Lab, is all about developing that foundation of how to set yourself up properly. That's what trading long-term successfully is all about. It's never about gambling or risky or anything like that. It's never about You know, it's never about being lucky in the markets, right? It's never about getting it right and being wrong and right and all this sort of stuff. It's always the opposite with a lot of things in life, right? Is that if we just slowed down and we took the highest quality trades out there and we saw this, like, this thing is amazing, this is it. And if you just slowed down and took that, you take literally 20, you literally be taking 80% less trades. Your success rate would your success rate would go through the roof. Your confidence would go through the roof. The amount of money you can actually then start to put on will go through the roof. And before you know it, you're not trading that much, but you can make good money. Like, for example, one of my last trades that I did, which was this one here, which was AFH. You know, this one here. The reason why I bring this one up here now, this was a phenomenal setup here. But guys, when you're looking at this here, right, when you start to become really, 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 really good at trading, and you start to increase your size, this one here, a $10,000 investment would have given you something roughly around $60,000 to $70,000 worth of a profit on this one trade. This is actually a trade that I took a couple of weeks ago now. Last week. Every trade is going to work out like that. But when you can just wait for really good opportunities, and you can see this, right? You know, and then when you can start to really increase it, and then a $20,000 position. Now, it doesn't mean you got the $20,000 at risk. It just means you got $20,000 position there. Now you're talking about $120,000 to $140,000 profit in one trade. That's how my mentor, who makes multiple seven figures in the markets, does it. He just sticks to it, increases. So I hope you can see, guys, that that's what it's all about when trading the markets. It really is that. It's never about being lucky, right? It's never about being lucky. You need to have the confidence, right? Even a $5,000 investment on one really good trade can yield so much good returns, right? So even a $5,000 investment on a really good trade could give you $20,000 or $30,000 profit. How many of those trades throughout the entire year do you need to start living well? Not that many. Do you see what I'm saying there? It's the complete opposite to the way that we think we need to approach this market. What I'm talking about here, guys, is a lot of the foundations of how you need to approach the market. Makes sense? Jesse B says, do you have, oh, okay, sorry. Savage says, do you have a video on how to do scans? Savage, the scans comes from your trading setup. So I can't do a video saying this is how you create a scan, because you can do any scans. You can set up any generic scan in TC2000, but the scan needs to come from the trading setup. The trading setup is where you need to work on that. John, I want to say thank you for your videos. Love what you do. I love trading and I want to learn more. Listening to you is helpful, and I know it doesn't sound like that though. No problem, Jesse. Well, Jesse, get your ass into that Master Trader Lab if you haven't done so. Don't be tight ass and spend the $6 per month and start learning all the stuff in there, because this, Jesse, the Master Trader Lab will definitely help you out. If you're not a member of it yet. If you are, fantastic. Spend more time in there learning about the techniques, the chart reading stuff, the foundations, the mindset stuff as well too, and the trading system. Start to use that as a foundation to move forward in the markets, because everything in there is going to help you so much when it comes to trading. I've identified a setup in silver 5 years ago, and I've been waiting for 5 years. Fantastic. X200, X 6 million. Grant Cardone, 10x this bitch. Andrew, g'day, John. Hey, Andrew, how you doing, man? Great to see you. Would you rather be right or rich? Exactly right. Exactly right. So, guys, what I'm talking about here is exactly that, and that's where, guys, like, if you want to become good at trading, it's all about spending some time. Like, even with my coaching program, there's one guy yesterday that I was speaking to, just a young fella, and I'm just like, I was speaking through him through email, and I could tell he's been part of my coaching program now for a month, but he hasn't been doing any work. And he's still saying that this is a really good setup. I'm just like, this is nothing like a good setup. And he's not doing the work required for him, right? Because I could say, okay, this is a good trading setup, and I can see it. But if he's not doing the work, then he can't see what a good setup looks like. That's where we need to come from, don't we? We need to come from that place of, yes, this is 100%, this is what a good setup is. Fantastic, fantastic. It's market update time. Do you know what time it is? It's silver and gold time. Let's get straight into it. So, and that's where, guys, it really, you're building that foundation, which is, and that's what I say to my private clients is that, you know, like, again, one of my private clients have been with me for a whole month. But the thing is like, I can teach him what to do, but if he's not actively actually doing it to learn exactly what to look for in a setup himself, then I can only do what I can do. You know, and then it's like, and then that's what I'm saying. Like, I'm teaching you what to do. I'm teaching you what to focus on. But if you're not developing your skills on for you to recognize what a good setup looks like, for you to go through the workbook, for you to understand what to focus on, and I guarantee this young particular fella who's signed up to my coaching program, he hasn't been doing the work, because I know who does the work and who does the work and who doesn't. And the work simply means learning and going back over time and learning within the trading rules and the setup, learning how to develop that, learning how to look at a setup and say, yes, this is a good setup because it has these rules met, which is the trading rules. Hi, Amita. Time to short gold miners. Maybe. So, guys, that's what I wanted to focus on today. Once again, guys, if you haven't done so yet, then if you need help with the foundations, the chart reading stuff, the mindset, even get access to a few trading systems that get you started, then go on down to mastertraderlab.com, grab your free trial to that. And if you're happy with it, you can stay and you'll be happy to pay as a member. And if you're not, let me know and you'll never be billed. So anyway, guys, that's it for me today. Have a great day, and I will catch you guys next time. See you guys.